Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today is Monday, August 11th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had one of those numbers bonanza days. We had the numbers working all across the board today, left, right, up, down, A, B, whatever you want to call it. The numbers were working. So stay tuned because we're going to go over that and a lot of technical analysis across multiple markets. So let's go ahead and start with the S&P first. She's down 0.20%. She's down almost a buck. Nothing really too crazy. She's essentially a stone's throw away from retesting the previous all-time high, and that comes in at 639.85. Now we got a couple things brewing here, a couple options that Mrs. Market wants to do. Option number one. She could essentially fail where she's at right now and crapping back down. If we scroll back to this area right here, this was a previous all-time high, and at the start of February, she wasn't able to poke her head above all-time high or retest it, and then she crapped and back down. Same thing right here. She tried, didn't get above the previous retest, and then she crapped and back down. Okay, so that's option number one. Option number two is that she pokes her head above all-time high, so she gets above 639.85, and then after she pokes her head above, she craps and back down. Where to? Possibly the 20-period moving average. We'll get into that stuff later, but that's option number two. How much of a spike of the high? We don't really know. There's some important overhead resistance levels that Inside the Numbers and Live Room members will have ready, but I can tell you that 645 is an important big fat round number up above. She doesn't have to get there, but that is a target on the upside. This can be one of those spike the high and rip it back down in the other direction trades. Obviously, that's very risky to do when we're a stone's throw away of all-time highs. You have to keep in mind the other side of the tape, we are the umpires calling balls and strikes. She's above all the moving averages, so the trend is your friend, and she could continue to just float them up higher. That is option number three. But we are in a on-time situation. This is choppy August. As you can see, we're down, up every single day. So there could be a trend change like this with the snap of a finger. So those are the three options that we have on the table. Again, we'll have the numbers ready for Inside the Numbers and Live Room members, and we'll be ready for whatever Mrs. Market throws at us. But we are in an on-time situation. We're retesting an important overhead resistance level, this big-time breakdown candle high. Okay, she isn't going to just waltz right through. We've seen that today. We have the numbers for that. We'll get into that in a moment. But this is an important area. This is overhead resistance. All right, let's go ahead and take a look at Inside the Numbers, starting with 0 dark 30 stuff. I told you that this was a numbers bonanza day. The SPY numbers were pretty much freaking spot on today. We had a ton of traders making money in the live room and Inside the Numbers. So let's jump straight into it, starting with the morning pivot at 636.90. Right at the vertical line is today's activity. Pivot is in green. And let's take a look. First 5-minute candle of the day, the low is 636.88 against 636.90. Funny how that works. She gave you about a buck on the trade, call it a stand-up double, and guess what? She retested the pivot, the low right here, 636.89 against 90. Funny how that works. Don't you think that the pivot was important today? So we had a ton of traders take the infamous pivot trade this morning, had tons of traders making money, but let's see what else we got, because we're not even done yet. What about above the pivot? If we continue to stay above the pivot and close candles above, the first area of overhead resistance on the board is 638.80. And then I put a little FYI out saying that I have a number 30 cents in front. Trader's choice if you want to front run it. But nevertheless, the numbers work. She made a high of 638.95, spiked it by a few cents, provided you a nice trade. We'll call it a Whopper with cheese. We call it high of day. How you doing? And then where'd she go? Right back to. She found support off the pivot. This low right here, the low is 636.91. So no question in my mind that these numbers were uber important today. We said earlier that the S&P is at an important overhead resistance place. This is one of those places. It's a spot where the market shouldn't just waltz right through, and we took advantage of the situation. Let's take a look at what else we got, and keep in mind that we're still at the early thoughts 0 dark 30 stuff. This is the entire game plan well before the market even opens. So if we start to close candles below the pivot and stay below, the next support zone is 635.50 to 633.80 with a midpoint phenomenon number between 634.65. How you doing? I mean, this is just ridiculous. She did come up short a little of the first number, but regardless of that, the numbers were so freaking spot on. The S&P found support or resistance at all of our numbers today. As you can see, the midpoint phenomenon was right on the money. In the first video I've ever done, I told you guys that actions speak louder than words. And I told you that I was going to show you that I know my numbers. I'd say that today was a pretty good example of that. Let's keep it going. So that was all before the market opened. It was all laid out for you. You could pause the video, read the intraday notes, go back to the chart, double check the work, all that good stuff. Not to mention we had some stocks on the move today. We had DigitalOcean and Monday.com. DigitalOcean did hit its entry target, but Monday was a jump target. She got below her entry levels, so we don't need to pay attention to that one. But let's go take a look at DigitalOcean. Entry number 1, 29.14. How you doing? She spiked it by a few cents, but nevertheless, this was support. This was a trade on the board, and we had traders making money in DigitalOcean. Not to mention we have a variety of different markets, 12 to be exact. Put some of these numbers up on your chart and see how they played out. I told you guys that it was a number bonanza day. We had numbers for the Qs, we had numbers for IWM, SMH, etc., etc. What about Camp IWM? She had a nothing day today. She's down 0.02%, pretty much just eating time off the clock beneath the 20-period moving average. And take note, the two trend lines that I've drawn on the board, the upward and downward trend line, creating a small channel. Right now, she's essentially just hovering over the upward trend line. Getting below the trend line, the door starts to open. Where to? The 50-period moving average and or the 200-period moving average, which happens to coincide with this big-time breakup candle low. Call it 216 give or take. That will be the next target / destination if we start to close candles below the trend line. If she holds her ground and stays above the trend line, the next important destination is going to be the most recent breakdown candle high. And then that would reestablish price above the 20-period moving average. Therefore, say it with me, the trend is your friend. Obviously, until she throws your shit out the window and something changes. But that's what we got for Camp IWM. She's teetering on the trend line. What about the folks at the transportation department? She had a 1% down day. She's now below 3 out of the 4 moving averages. The last line of defense happens to be the 100-period moving average. And take a look at this. This is pretty interesting. I haven't touched this number on the board, 15,432. It's been on my chart for the last week or so. And what was the high today? The high was 15,434. Pretty much on the frickin' dot. Now, like I said before, this was an important number. It's support on the way back down. It's resistance on the way back up. It's magnetic. It's important. And she showed you that again today. So she tried to retest it, tried to recapture that number, and essentially failed. That number happens to fall in line with the 50-period moving average. And guess what? She tested it and crapped right back down. This is bearish behavior. Once we start taking out these lows right here, the low happens to be 15,054. Once we start getting below that, the door starts to open to this big time breakup candle low that happens to fall in line with the last line of defense. The moving average is a little bit above, but she doesn't have to get to the absolute low. It's around 20% in the vicinity of the low. So call it around right here. And that is the next important destination for the transportation department. If she wants to flip the script, she has to get above 15,432. Give or take. That's the only way she's going to recapture those moving averages and try to reestablish trend. That's what we got for the transportation department. What about the Q people? Well, they're down 0.30%, so not that much of a big difference between the Qs and the spiders. But notice what she did. She did one of those options we discussed earlier. She poked her head above the most recent all-time high, couldn't sustain price above, and then she came right back down. Wasn't able to get that far. So is this a sign? Is this a tell? Is this puzzle piece information for the spiders? Possibly. We had our second favorite market leading indicator, the transportation department, have some relative weakness against the Qs and the spiders. They tried to retest an important number, couldn't get above it. Now they're in the vicinity of testing those lows and possibly the last line of defense. So my second favorite market leading indicator, but a number one, canary in the coal mine. Will she just crap right where she's at? Will she poke her head above just like the Qs and then make her way right back down, possibly to the 20-period moving average, the first destination? Or the last option, she's just going to make new all-time highs and float them up. She's at a very important overhead resistance place, both the spiders and the Qs. She isn't able to just waltz right through without at least a small minor fight, which they're displaying right now. We're in an on-time situation, so I think we might have one more test at least to the 20-period moving average or lower. Going to a weekly chart of the spiders real quick. First big time destination is the most recent breakup candle low at around 625. So then going to the daily, first destination, 20-period moving average, not too far away from it. Bigger destination down below, 625. What about the financials, XLF? She's still sandwiched in between two important pieces of unfinished business. We're hovering over the 50-period moving average, so it's only a matter of time before she makes up her mind and goes to test the unfinished business up above or the unfinished business down below. She's down 0.04% on the day, pretty much a nothing day, nothing to talk about for XLF. She's still going strong. There's nothing wrong with the overall structure of the market. You know how it goes. What about SMH shaking my head? This semiconductors. Smash mouth. We still have that important number on the board at 294.70. It's still an important overhead resistance area. She tried to retest the previous all-time high, almost got there, wasn't able to establish price above, and then she came right back down, closing candles below that 294.70. The more candles we close below 294.70, the more likely she's going to go retest home base and even this gap down below. The gap comes in at 286.62. So she's a stone's throw away from reaching new all-time highs. She's above all the moving averages, so the trend is your friend. So we got a lot of markets in similar positions at all-time highs. They're a stone's throw away all across the board. So we got a lot of interesting stuff building up. We got my second favorite market leading indicator, but a number one, canary in the coal mine, showing some relative weakness. The spiders, Qs, SMH, they're all at important overhead resistance levels where price shouldn't just waltz right through, as we've seen today. Is she going to stick with it and go back down? That's what I'm kind of leaning towards. We're in an on-time situation, important overhead resistance place. Or she can poke her head through, do a little bit of trick trap and fool and frustrate some traders, and then just crap right back down. But we'll wait and see. Only time will tell. Time is more important than price. Have I told you guys how much I appreciate each and every one of you? Without you guys, these videos and MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to wrap things up for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐴. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. Enjoy the rest of the day, folks, and take care now.